Welcome and thank you for being with us. I'm Amjad Ahmed, Director of the Atlantic Council's Empower ME initiative. At Empower ME, we have been adding a new pillar to the discussion focused on developing the economies of the Middle East. Our goal is to drive positive economic change to improve the long-term prosperity and stability of the people. We strongly believe that empowering entrepreneurs, women, and the private sector will create the new Middle East. Since our official launch in September of 2020, we have brought leading public and private sector voices to provide a different view, and today is no different. We are honored to be co-hosting with our friends at Abana, a distinguished panel of innovators leading fintech companies to discuss how they are tackling critical issues to make financial services more inclusive in the Middle East. Abana is the preeminent US organization for finance professionals and institutions interested in the Middle East and North Africa. This is the third webinar in our joint series that aims to shed light on recent changes and innovations in fintech in the MENA region, identify challenges and opportunities, and explore policy recommendations. It's now my great pleasure to introduce Aisha Ghani, who will moderate today's discussion. Aisha is a multimedia reporter based in London, currently serving as Bloomberg News FinTech reporter. She has reported on breaking news, features, and scoops across Europe, the US, Asia, and the Middle East for AJ+, BuzzFeed News, The Guardian, the BBC, the Financial Times, The Independent, and the New Statesman. You can find her complete bio on our webpage for today's event. Aisha, thanks for being here today. The floor is yours. I think you're muted.
Thank you so much, Amjad. Hello all, thank you so much for joining. I am so excited to be moderating today's event, Inclusive Finance in the MENA region, How FinTech Opens Doors for the Masses. And I'm delighted to introduce you to our three speakers. First, we have Hassan Fayette, founder of Cairo-based startup AD. His company facilitates relationships between farms and labor in Egypt through offering credit and financing. Its aim is to empower 2 billion seasonal blue-collar workers globally by providing access to year-round work opportunities, as well as providing upskilling and health and social benefits. We're also joined by Mondir Khanfir, founder of Wiki Startup. It's a business incubator which aims to create an environment to accelerate startup growth and potential for professionals in Tunisia. It provides technical assistance and tailored coaching. Finally, we have Milad Singh, the co-founder of Rise, a platform focused on bringing financial products to migrants across the Gulf to help them build a better financial future. It evolved to become Share, one of the largest and most global card issuing platform, issuing more than 2 million. So let's jump right into it. How does fintech open doors for the masses? Please summarize in 1 minute. Let's start off with you, Hassan.
Great. Thanks very much, Aisha, for the kind introduction. And thank you to Amjad and the Atlantic Council team and Abana for having me today. I think what we've come to see is that fintech adds one tremendous set of value to the segment of the population that we're talking about today, which is the underbanked and the unbanked in the MENA region. And what we've come to see is that the two main factors are enabling trust and increasing efficiency. In a real life example, the way that the labor market for farmers work today, or for agri workers works today, is that usually farmers will work for an entire week or 2 weeks before they get paid for their work. And during this time, there might be bonuses that they deserve to have. There might be certain deductions. There's a lot of factors that come into play, and they only come to realize these accounts when it's too late and when there isn't really much data to prove what their real earnings were. So one of the key features that we've been working on that has become one of the key pillars and value adds to the workers is the wallet, and being able to see how much they've earned on the day, and being able to earn to collect these funds, or to know exactly when these funds will be dispersed into their accounts. This has led to much less friction and has increased retention of the workers.
Thank you so much for that, Hassan. And the same to you, Monter. How does fintech open the doors for the masses?
Thank you, Aisha, and hello, everyone. Very pleased to join this conversation. Fintech is not only about providing equal access to opportunities and financial services to everyone. It's about social value creation and how we can understand the social value creation and when we can measure it through financial inclusion. Let me say we have three levels. The first level is the ethical development, giving the chance to everyone to access to public services, to payment solutions, and to have an existence in the financial system is a way to integrate all the people in the economy. It's also a full exercise of citizenship, because you cannot exist if you don't have a wealth to manage. And it could be yours, it could be the community wealth, but you are involved in the wealth management. And of course, the third dimension is the responsibility towards the vulnerable groups, or minority in the society. So these are the three dimensions.
Wonderful. Thank you so much. Milind, how does fintech open doors for the masses?
Thanks, Aisha, for the question, and thanks, Amjad and the Atlantic Council for the invitation. I think a better question to start from is, why is it that we need fintech, right? Why is it that the banks already have not got everybody covered? And our view on this is very simple. Every financial product in the world that you think of is designed for somebody who has an income. Need a loan? Show your income. Need to invest? Show your income. Want to buy insurance? Show your income. But guess what? Most people in the world don't work, right? About 60% of the population, or about 4.5 billion people in this world, don't hold a job. Now, how is finance, fintech, or banks supposed to cater to the 2/3 of the world that doesn't have an income but needs financial products? And that's where fintech platforms and what we are doing comes in, right? So what we do is we allow these individuals, the 3 billion that hold an income, to create financial products and distribute it to people that they care about or bank their tribe. So instead of relying on centralized institutions like banks or even fintech platforms which are working with banks, we are flipping the equation and saying, what is it that we can do to build a billion banks? Everyday individuals helping each other out in the networks they trust with the people they care about. And that's where fintech can make a massive difference, because it can change the dynamics of who is a producer and who's a consumer. People don't have to be consumers anymore. They can be creators of financial products.
Well, thank you for those answers. And that takes us perfectly into the next question. So what problem are each of you tackling and why? How does it change today's system? If we could start off with Monter, please.
Okay, right. Yes. How to tackle this question? Maybe I, as an ecosystem builder, I will give you a new perspective, because I get the chance to work in a very hostile environment, which is the Tunisian one. It's not favorable to innovation, in fact, as many countries in the MENA. And what's amazing is that no one is really at the, let's say, decision-making level where that we cannot build up a fintech alone. We cannot develop the fintech as a sector. It's not a sector. It's maybe a cluster that improves, let's say, would create, to develop activities, economic activities, but it is not a sector. And fintech is inclusive by design. What I mean by that, in fact, it extends the use to technology to all social categories, okay? And it includes different tools and different, let's say, compartment in the value chain. It is the backbone of the economy, of the digital economy. And from there, we can imagine that what is happening in the region, in particular, the MENA, is that we are extending or moving the boundaries of the power. Okay, and there is three boundaries, power boundaries, that are moved by fintech. The first one, is the collaboration paradigm between the private sector and the public sector. The fintech are moving the boundary here because the concern of the public sector is no more very well defined. Okay, and the private sector is also entering in some compartment or rooms of what we call the prerogatives of the government. Because when you have money, and you, for instance, the crypto, which is the second pillar of the fintech, you are taking over the central banks, for instance. Okay, and the other side is the data, the relationship with data. The data as not only an input or an output of a process, but also as a property and as value, okay, and as money. So you see, the way we are perceiving the economy is changing thanks to, let's say, all these ingredients, and from there we can. I will come back maybe later. Can elaborate how in the ground we can build up the sustainability with fintech.
Lovely. Thank you so much, Mondir. And, we were talking about accessibility here. Hassan, I was wondering if you could perhaps elaborate, what are the problems that you're tackling and why, and how does it change today's system?
Sure. So we're essentially, what we're trying to do is we're trying to bring about meaningful and reliable opportunities to agriculture workers. And that means typically workers have seasonal kind of work, and their horizon in terms of income can extend as far as 3 months, but it's very rare for them to have a picture of how much they can earn over a year. And this entire market operates informally. It's cash based. There's no data to really track it. So what we're trying to do is double faceted. We're trying to provide them access to year-round work opportunities by clustering or aggregating the demand through different crops across the year. And we're capturing the data about these workers in terms of their productivity, their reliability, their earnings, to be able to then build meaningful profiles for them that allows us to offer them financial services. And I think Milind earlier alluded to the point of the problem that most of the global population doesn't have a stable income. We're kind of focused on the segment of the global population that has a certain income, but it's undocumented, it's not captured anywhere, and it makes it very difficult for banks to profile them and to provide them with financial services.
Milind, yes, you touched on this, of course, in your summary, but what are the main problems that you're seeing and which led you to your startup?
Yeah, so it's been an interesting journey for us, Aisha. So we started Share as a solution to migrant finance, right? So the origin point for us was we have a very large number of migrants across the MENA region who are sending money back home to their families. But since they are the income earner, they are the only ones who can get access to any financial services. The families back home cannot. And the question we asked ourselves is, how do we enable the families back home to, for example, get insurance or, for example, get a loan based on the income earner who is a migrant sitting in, say, Dubai or Saudi, getting the product and then being able to use or share that with the family back home. But once we sort of created our first product, which effectively just allows anyone anywhere in the world to create a card and share it with the people that they care about, no matter where in the world the beneficiaries are. We realize that there is another sort of bigger problem at the heart of finance, right? It's something we all face, but we don't probably realize it. Every interaction you have with existing financial institution is a zero trust interaction, in the sense that when you walk in and say, hey, look, I want to access my account at a branch, the first thing they do is, can you please present your documents, right? Let's make sure that you say you are who you say you are. If you want to get a loan, let me look at your income statements. Let me look at your credit score. So all the time, centralized institutions or financial institutions are trying to engineer trust, right? They're trying to build trust in you. They're trying to make sure you are who you say you are. But that's not how we live our lives, right? We live among trusted networks, people that know us, people that care about us, people we went to school with, people that we work with. A better way to create and distribute financial products is to power the existing trusted networks rather than all the time trying to create engineer trust. And that's what Share does, right? Share allows everyday individuals to extend their financial access or create financial products for people that they know and trust already. If you need a credit, you know what, I'm here to give you credit. And guess what? That's how the world today lives, right? 70% of all the borrowing that happens in a market like MENA doesn't come from a bank. It comes from a friend or family member. But all of this is informal, all of this is cash based, all of this is not efficient. What we are doing, we are bringing the tools which allows these individuals who we call everyday bankers to really do the banking that their tribe deserves in a seamless, meaningful and digital manner. And that's how we are approaching the issue.
Thank you so much. I'd quite like to stay with you for the next question to start off with. We're talking about inclusive finance. We're talking about access to capital and affordable financial services for women, blue-collar workers, farmers, migrants, and other underserved communities. And these communities can spur economic development and the private sector growth. So you've spoken about this. How can we improve access to these communities? But also, what is the most pressing issue in your opinion?
We talked about it. I alluded to it earlier, right? It's about building trust, right? I mean, so as Hassan was talking about, if you're a farmer and you're seeking to get access to a credit loan, or if you're a migrant or your family who's dependent on somebody sending money from across the ocean to you, how do you get access to credit? How do you get access to insurance? Financial institutions, driven maybe by the regulatory norms that have come into place, driven by the way they have evolved. An interesting anecdote is, if you think of the word banks comes from the Italian word banca, which is bench, right? So banking was really about people sitting across a bench and doing transactions among networks of trust, right? When you took the bench away and you replaced it with a nice, beautiful glass and concrete building and put up tellers and cashiers, you took that trust away and you're trying to build it all the time. We firmly believe that that's the answer. The answer is to basically try and bring ability to originate financial products in the hands of existing trusted networks. If you think about, what does it take to give a loan, right? Which is one of the biggest challenges most people face. Every loan requires two things. It requires risk appetite, in the sense that I can trust you to pay me back, that judgment, and it requires cash. The problem is, most people that are around you are willing to take the bet on you. They have the risk appetite for you. The challenge is they don't have the cash. The cash is centralized and sitting with a few people. If you are able to figure out tools or products which enable these individuals who trust you already to take the bets on you that they take anyways on a day-to-day basis, you create a paradigm shift. You reduce the barriers that are artificial in our view for people to get access to financial products, and it becomes much more accessible and easy for people to get access to them.
Thank you. Thanks so much. Mondir, what are the most pressing issues in your opinion?
Yeah, we have to be very careful because giving access to loans to poor people is also a way to maintain them in their poverty. So we have to think a little bit differently. How to help them to, let's say, generate revenues and have, let's say, an entrepreneurial spirit, and the money they can get to be invested as a capital in a productive initiative, which is not always the case. So giving access to financial services, I'm fine with that. But we have to compare also the practices. In Tunisia, for instance, the interest rates are very prohibitive. Okay, for vulnerable groups, in particular women, because they of course they are small loans, small credits, but they are very expensive. And at the end of the day, they cannot cover, who don't have enough margin in their business to reinvest or to have savings and to get free from the future loans. So when you are in this loop of getting a credit to have to invest, and then having a credit to expand, and having a credit to do different things and to pivot, at the end you become dependent of the loans. Okay, so you're not getting free from the loans, and this is the issue I see in particular in Tunisia case. But I know that we are in a situation where we have to go to do probably both. We have to accept that some population is not, let's say, enough prepared to understand how to get free at midterm, let's say, from the loan trap. Okay, what I call the loan trap, even if it is a microcredit.
That's a really interesting perspective, and I'm sure audience will love to ask more questions about that. Just moving on, I actually want to ask this to you, Hassan. What are the areas of growth and latest fintech innovations making finance more inclusive in Tunisia, Egypt, the UAE, and of course, all of the MENA region?
So I think that generally the region, and I'll speak about Egypt more because this is the market that I would claim I'd know best out of the ones you mentioned. It's ripe for innovation. There's a lot of innovation that needs to happen on the KYC side. A lot of innovation that needs to happen on the data side. On distribution, I think distribution is one of the main areas that are going to define the winners in the fintech space in the region. So yeah, if I were to say KYC, data, and distribution are kind of like the three main areas that are ripe for innovation. And the other thing is, I think that the winners that are going to come out of the region and be able to really crack a compelling value proposition for the masses will be embedded fintech players. So players that are coming in that are offering tangible value to this population on a daily basis, and they are using fintech in a smooth and elegant way that just kind of like plugs into their value proposition and makes it a whole lot simpler. And that's what we're trying to do at ID. We're trying to help workers earn more money. We're trying to help them have more consistency in terms of their earnings. And by doing so, by being a part of their daily lives and adding tangible value to their day-to-day lives, we're then making their lives just a little bit easier by giving them access to different financial services, whether it be payments, insurance, and so on and so forth.
Great. Thank you, Mondir and Milind. I was wondering if you had thoughts on, if you also had thoughts on growth areas, and especially Mondir, I know you work with lots of startups too, so be curious to hear what you have to say.
Right. Just to a small remark on the agriculture sector. Yes, what Hassan is advancing as idea is the farmers, if we take the farmers, need to have a good predictability on their revenues. Okay, otherwise they cannot invest. So if they get loans, they need to at least projects with more or less uncertainty, of course, but at least they have to make sure they will sell their crop and the production. And this is very important. And if you are in a country where the marketplace or the market circuits and logistics and supply chain is fragmented or not very well managed, with a lot of interference and collusion, distortion, and also others, let's say, impediments, you cannot really invest cleverly. And this is the point. Okay, so now to come back to the startups, this is you are right, Aisha. I get the chance to look after different business models, and let's say in the fintech, we still discovering new ones every day, and this is amazing place for innovation. And even in our region, now the mortality rate is very high because, as I said earlier, the environment is very hostile. So we have at least 4 categories of fintech startups. The payment solution ones, this is one category. The risk management, of course, KYC and whatever. This is what Milind is doing. The financial data, very important, and the credit solutions. Those are mainly the prominent, let's say, categories of startups. And what we should know, that we cannot build up a sustainable fintech industry if we don't have all these categories operating together. Okay, so the local ecosystem is very important. So building an ecosystem which is favoring the merge of these business models or business models in these categories is very important.
Would you like to add, Milind, to?
Yeah, just a couple of, I think just a couple of points. I think the a big sea change in fintech in the region has been just the acceptability of the fact that fintech startups are a force for good, right? I mean, we are just taking this conversation for granted, but I remember when we started Rise, which was not that long ago, 3-4 years ago, this was not a given, right? The banks were not very warm to it. Regulators were not very open to the idea. So I think just the general acceptability of the fact that fintechs are here to stay, they can be an important part of the solution set, is beginning to emerge, has emerged really over the pandemic and what has happened in the last couple of years. The second thing that I would add to that is the emergence of some of the base players, right? The infrastructure players who enable bank connectivity, players who enable you to issue cards, players who enable you to do embedded finance. Those are super important building blocks, right? Initial fears that banks and regulators had about fintech in the region was really, they will come and eat the bank's pie, right? They're going to look like a bank, feel like a bank, operate like a bank. But if you look at what fintechs are doing in the region, they don't look, feel, or operate like a bank at all. They're going after segments, they're serving them differently. They are providing different products and services out there. And I think that healthy equilibrium is now beginning to emerge, right? A dialogue like this would not have been possible 4 years ago, right? The fact that we're sitting here having this chat and talking about what could be done is a great indicator that, the discussion is moving forward. And I think that helps. Having these discussions and figuring out what can be done helps.
I actually want to pick up on that point, Milind, and ask this to everyone else as well. You said that we couldn't really have these discussions before. So what does the future of financial services look like in the region? But interestingly, we look at fintech and it's meant to be about opening up finance and sort of democratizing the space. And who's going into fintech? Is it just like the same sort of people who would be going into banking industry or tech industry? Is it opening up? So yeah, on top of the question, like, what is the future of financial services in the region?
That's a difficult question to answer, right? Because I think, our view, obviously, look, there's a company approach to how we are doing this thing, right? But in general, we believe finance is going to be more decentralized than where it is right now, right? I think having a few financial institutions trying to serve and be everything for everyone is not how things are going to be. Even if you look at, for example, the US, right? Uh, it has one of the strongest histories of a lot of community banks, right? I mean, the old, if you think about banking in the good old days, in the 40s and the 50s, it was about the local branch manager who was a respectable citizen of society and everybody knew him or her. And, that person used to make things happen. That has somehow been lost, right? I mean, that the soul of banking, so to say, has been lost by becoming too centralized, very few, very large institutions. I think the pendulum is definitely swinging the other way, right? You're going to have more decentralized players in the market, and you're going to have more players providing financial services which look less like finance companies, right? I mean, so is Apple a finance company? Apple Pay is probably one of the largest payment gateways in the world, right? But it's not a finance company. So I think that's where we are headed. We're headed to a more decentralized world. We're headed to a world where individuals and communities do more things at a local level, more decisions are done at a local level, more products are created at a local level, and solutions are found at a local level, and there's less reliance on centralized institutions to make things happen.
I was wondering, Hassan, if you had thoughts on that, like the future of financial services in the region.
Yeah, I think, typically the best way to predict the future is to look at the past. And if you look at some of the companies that have really been able to have a meaningful impact in terms of fintech in the region, I think the main one that we can name is Fawri, which is based in Egypt. And their main value add or innovation was around the distribution and how they were able to make it a lot easier for people to get cash wherever they were. You don't need to go to a bank to get the money. You don't need to try and find an ATM. You can just go to any shop, bakala, whatever, and just with their device you can get the cash. And I think that this is going to be where the future is, making it a lot easier for people to access the services wherever they are, making it very convenient for them. That's number one. And number two, I'd reiterate what Mina said around the embedded fintech. I think that pure play fintech will not necessarily be the way to go in the region, simply because, again, if you look at the past, this part of the world has traditionally not embraced financial institutions and banks. There's a very clear reluctance to engage with these types of institutions. However, if the financial service is embedded as part of the value proposition and is designed to make a transaction flow easier, then they are much more likely to engage with that type of service. So I think that just to summarize the 2 points, distribution and embedded finance are the main way to go. And another thing that we've seen that can be quite interesting and emerging, which is largely untapped, is development finance and how development finance is dispersed to the target populations and segments. And this is an area that is completely underdeveloped around the world. You have hundreds of billions of dollars every year that are being allocated for development funding, but actually just a very small portion of this funding ends up reaching the beneficiaries, because you have layers and layers of intermediaries in between that don't necessarily drive the right efficiency. So that's another area that we believe for our part of the region, for other emerging markets, can also turn out to be an interesting sector or domain to look into.
Thank you very much, Hassan. So before I open it up to the floor, I do have one question that's really important to ask all of you, and I just hope you can summarize like in a sentence. But are policymakers serious about allowing fintech to solve inclusive finance issues, and why now? Perhaps you could start one there in a sentence.
Yeah, sure. Many countries are afraid to lose their sovereignty on their currency. Okay, and the currency in the MENA region, most of the countries, is not convertible. So when we see the interference of this new generation of activities and businesses based on cryptocurrency and developing new services out of the regulatory and the common, let's say, framework, it could produce some conflicts. And so what we, let's say, maybe target with the fintech and inclusiveness in the fintech is to put it at the policy level as a priority for the governments. Otherwise, it will not develop in the region.
Thank you very much, Milind. I was wondering if you had some thoughts on this.
I actually have a different view than Mundir on this. I believe that policymakers have no options but to get on the bandwagon because the train has already left the station, unfortunately. The speed at which innovations are coming in fintech, the sheer ingenuity of the founders and what they're trying to build, and how consumers are adopting it, right? I mean, it's just becoming really difficult for policymakers not to be, putting this as something that they're looking at. Because, I mean, we look at finance as inclusive finance or non-inclusive finance, but at the end of the day, if finance is serving the masses, it probably indicates it's serving the majority of the population in your country. It probably indicates that most people really need the solution, right? As a policymaker, you have to figure out a way to make sure that that solution fits with, what you think is right in the country. But that's my view. My view is that the policymakers have, unfortunately, don't have a lot of choices at this stage, right? I think they're better off. Obviously, they have to protect the consumers, protect the national interest. That's always a given. But I think they're better off cooperating and collaborating.
And yes, same question to you, Hassan. Are policymakers serious in your experience?
I mean, I feel lucky now because actually my answer being in Egypt is a hard yes. I think over the past couple of years, the government has been a major enabler of fintech. There's a new non-banking financial services law that just came out a few weeks ago, and it's really encouraging. There's a new law that the central bank is drawing up for fintech that also from the likes of it looks like it will open up a lot of doors. The central bank has set up a sandbox that allows any startup to apply for and to have basically a trial period to test their fintech solutions for 2 years. And I think it's a great time to be trying to work on financial services in Egypt, at least, and given the seriousness of the policymakers on making this happen, because they've realized that you need to pull everyone into the formal economy to make sure that the country can grow in an inclusive way. Otherwise, people are just going to be left behind, and that's not a way to build sustainability.
Thank you so much. So we're going to the questions now from the floor, the audience rather, online. This is sort of the other side to that question. The first question is from Adam Lucente from Al Monitor to Hassan. What has been the reception of Egyptian farmers to your startup? Is this community excited or scared to use new technology in your view?
I think it's a process. I think that at first there's obviously, as is with any new technology, especially when you're introducing it to a sector that typically is a late adopter of technology and a segment of the population that is not typically used to using that. There's always at the beginning a sense of skepticism or what is this going to add? But as soon as they start using it and they start seeing the value add that it brings. Very quickly we find them referring people to come and start using it and so on. So it's a learning process, but overall, I mean, we've so far over almost 1,000 agri workers have worked through us or have found jobs through us today, and we're still at the infancy stage. So I'd say the reception has been quite well, alhamdulillah.
We have a question from Amar Abdullah to all the panelists. In your opinion, what more could be done to encourage young people to join this growing sector of fintech? Why don't we start with you, Mondir?
Usually, I don't like to encourage anyone to do something. It's a part of his own decision and also a passion for business and activities. So, but once he engage, or once a young man or woman engage in this industry, be sure that he or she will find a lot of support, at least in Tunisia, because we have a lot of incubators and accelerators dedicated to entrepreneurship and in particular to finance, to fintech. Okay, so that's the point. The starting point is to learn where to address let's say the attention, and also to whom asking the help, which is very important.
Perhaps if either Milind or Hassan would like to jump in there, what could be done to encourage younger people to join the growing sector of fintech? Or even like, would you be able to let us know that whether there are young people joining this industry in droves in the region?
I think there are youngsters joining startups in droves across all sectors in the region. I think startups have become the cool new thing to have. You're seeing a lot of people move away from the corporate world and trying to come and work at startups. So there's definitely feels like the startup revolution, so to say, happening around us in the region. And as fintech continues to be or is one of the largest and the most dominant sectors in startups, right? Attracting a fair bit of capital, and where there's capital, that's where the talent goes. So I think you're seeing a lot of youngsters, or even not so young people jump on the bandwagon, so to say.
Yeah, just to add, maybe I think that all the ingredients are there at this moment and are converging. You have strong support from policymakers and regulations that are enabling a lot of fintech solutions to emerge. You have a really high investment appetite into the region, and specifically into financial services. And you have companies that have already emerged and that have built a critical mass of talent that you can draw from in order to help build your own business. So I think that the main ingredients are there. What you need is a good chef to come into the kitchen and come up with something good out of them.
The next question for all the panelists: can a MENA fintech go global?
I guess I can take that question. I mean, why not, right? I mean, if you look at share and look at where we are, we have users in 173 countries. So definitely you can go global. I think the challenges to fintech going global are less to do with whether they are from MENA or not. They are to do with what's the business model, right? If you have a business model which is reliant on banking partnerships, uh, undertaking regulated products and services, it's just challenging to go global, because being global means having to get permissions in multiple local markets, doing the tie-ups, creating the platforms, and then launching it. One of the advantages of the platform that we are building is inherently we are not undertaking a regulated service, right? We're not touching the money. We are not creating any financial instrument ourselves. So that allows us to effectively target a more global market of multiple countries, and grow in multiple markets. Yeah.
Mondher or Hassan, would you like to add to that? Can a MENA fintech go global?
It's a very simple question. Obviously, yes. Now, the most successful ones are moving to the globally very quickly. Okay, and I have some examples in Tunisia case, and usually when they start small, they already think about global strategy, because fintech, as I told you, is going beyond boundaries, and geographical boundary is also something that is natural to jump over if you want to scale up, of course.
Do you mind perhaps giving some examples of those fintechs that people should have an eye on in the Middle East?
Yes, of course,
Yeah.
I can mention at least very successful artificial intelligence startup that is also dealing with some, let's say, financial. It's not only dedicated to financial inclusion. It's Expensia, the Expensia startup. It's a B2B model. Most of the cases in Tunisia are B2B yet, which means that it's not teaching the B2C segment. And Expensia is based in Tunisia and in France at the same time. Okay.
Maybe I can move to Hassan for the next question. You can also answer that one too. So Majdi Ramadan from Abana has a question. Is there enough digital access and internet penetration at this stage across MENA to allow fintech solutions to grow exponentially?
I think the short answer again is yes. You have some of the highest mobile penetration rates in the world, actually, in the MENA region. And you have people that are large segments of the population that are now routinely using social media apps and so on and so forth. So I think it's now the digital enablement used to be a concern. I think today it's not so much anymore, especially also given the fairly young population that is in MENA, especially in a country like Egypt. So that makes adoption as well of new services and new apps much easier and much more effective than in other markets where the population tends to be a little bit more on the higher end of the age brackets. So I think it's there, and it's again, it's ripe for growth.
I'm curious, Milind, how that impacts people you speak with. Is there enough digital access and internet penetration to allow your fintech solution to grow exponentially?
Yeah, so I concur with Hassan, right? I think, in fact, there is far more digital literacy, I would say, at the lower ends of the spectrum, because the phone is not just their way mechanism to access finance. It's a mechanism for entertainment. It's a mechanism for education. It's a mechanism to stay connected with their friends. So it's literally the most important device the individual carries, right? And you're seeing more and more as the penetration of lower cost handset increases. You're seeing more and more individuals, even at the lowest end of the spectrum, carrying smartphones which can pretty much deliver most of what a high-end smartphone can do. I don't see that as a barrier anymore.
I actually have another question. So, how did the pandemic affect fintech in Sorry, I would like to ask that question to Monde. I'm really curious how it affected the startups you work with.
It's supposed to be an accelerator for fintech development. And it was the case in many countries in the world, and in particular in the MENA. For Tunisia, it helped the government to take some decisions about dematerializing some processes, including payment, mobile payment, which was, let's say, in the bottleneck for decades. And yes, crises are good for innovators, good opportunity to move forward some new ideas and to implement them. Now, I'm not sure it will be sustainable, because once we will get back to the normal situation, normality, if there is a normality situation, I'm afraid that we will come back to the old, let's say, habits. And this is my concern about Tunisia.
I have a question from Manuel Lagendorf to all. What are the best ways to teach underprivileged populations financial and digital literacy? Who are the key stakeholders that should enable that? Perhaps we can, perhaps Milind, you'd like to respond to that first.
So, I can talk a bit about a very interesting experiment we did at RISE. So when we launched RISE, which was basically dealing with migrant workers, we initially started with the app first approach, right? So we said, please install our app, it's beautiful. And then we realized that people didn't want to, because, their phones had WhatsApp and Facebook, and, the memory was completely full, and they didn't want to put another platform on their, another app on their platform, because that meant deleting photos or videos or whatever. So we basically moved the entire platform onto a chatbot over Messenger. So people could send us a message on Facebook Messenger. We could help them get access to financial product, and we could help them answer queries. And on top of Messenger itself, we built a chatbot, right, which was basically a financial health check chatbot, which could basically engage with them on 3 or 4 major languages. They could ask 10 questions, I believe it was, and give them a sense of how they were doing financially. And what we learned from there was a couple of things, right? The first was most people at the lower end of the spectrum didn't realize that they had the capacity to save and invest. I mean, it's just like, I don't make enough money, right? That's the starting position. One of those simplest things we did, if somebody told us their salary was, I don't know, 2,500, we told them you earn more than, 2.5 million people in the UAE as a number, right? So when they started contextualizing that they actually were not that worse off or compared to what the other people in the country are, that improves their ability to start tuning into what saving looks like. The second thing we realize is, for most people at this end of the spectrum, talking about money is really hard, right? I mean, we don't talk about money in general, right? I mean, finance is one of the last topics we discuss when we sit with our friends and colleagues. For them, it's even more difficult, because if you are seen as somebody who is good with money, you're always being asked for loans, or you have actually borrowing from each other. So giving them a platform where they could, in a conversational manner, engage with what they saw as a technology tool chatbot, and helping them understand their finances, how much they could save, how much did they need to save for retirement in 20 years if they wanted to buy a house in Philippines, as an example, is very, was quite the breakthrough. I think that still to date remains one of the largest data sets of how migrants approach their financial behaviors. We had something like 100,000 odd people take that test. So I think technology can, especially going on platforms which people already use, can play a massive role in improving their understanding of their financial health and what they can do with it.
Thank you so much for that. I've got time for perhaps one more question before we wrap up. So I wanted to ask, what does the scale look like for MENA fintechs? And also, I wonder whether you have a message to VC funders about startups in your region, and specifically the fact that so few women are funded by VCs around the world. So I was curious what your message would be to funders. If we could start off with perhaps Hassan, and then Monder, and then you, Milind.
Sure. So I think that generally, I mean, if you compare the space today to where it was 2 years ago, I think there's been a drastic improvement in terms of the VC space. I think that the quality of the investors has increased tremendously. The availability of capital, the dynamic as well has evolved a lot. Where previously used to have investors kind of like think of themselves slightly as the godfather and so on, whereas now it's a much more collaborative kind of relationship between the founder and the investors, and it's seen much more as a partnership rather than it was. So I think that to come to your question around the gender disparity maybe that exists, I think that it's a process. As you said, it's something that's common all around the world. I don't think that investors necessarily have much control over it. There are more and more startup female founder led startups that are emerging, but obviously in the region it might be a bit more of a challenge for obvious reasons that might exist. I think it's a process that everybody needs to work on, and it's not just on the investors to kind of like have a quota for female founders or whatever, but it's really also up to companies, because most of founders are ex-employees in technology companies. So if you have more gender equality in your workforce within the company, odds are that more female founders will come out of your business and launch their own startups. That's one thing. And the other also, I think it has to do with making startups more appealing for women in general. And I think that it's a little bit more challenging in the region for multiple reasons, whether it be working hours, whether it be in requirements related to kind of like just spending a lot more time perhaps on field that culturally sometimes could be a barrier. So trying to craft this balance, I think, is a challenge that founders need to think about, and ultimately that will feed into the female founder pipeline, I think, and make it easier for investors.
Very quickly, Monder, if you could provide any thoughts on that.
Please. I can add another idea on what has been already advanced, is interconnecting ecosystems. It's very important to interconnect ecosystems. And from there, we can benefit from best practices, and we can, you see, the gender issue is part of the inclusion and sustainability and the sustainable goals of the United Nations. So you see, we have to think globally everywhere, in particular in this field of fintech and innovation in the financial services.
Thank you very much. I'm going to wrap up now because we're running out of time. I'm sure you'll all agree that was a really illuminating discussion, and we learned so much about innovations in the region. We explored the question, why do we even need fintech? We learned of the social value creation of fintechs and its grand aim to allow everyone to access and integrate people into the economy. We learned 2/3 of the world doesn't even have income, and so we heard of the importance of building trust. We learned more about solutions for migrant workers and farmers, and we looked at for me, I think what's a really interesting question is, the people who are behind these new startups, who are behind the fintechs in the region. And I'm curious, will it continue to disrupt the system? Thank you so much for joining us. And thank you so much to the Atlantic Council and the Empower Me initiative for this discussion. And have a great rest of your day. Thank you so much.
Thank you.